Hello, and welcome to another update video about Hedera Hashgraph, HBAR. We continue to move further in a sideways triangle pattern. That's been the pattern I've been watching for the last few weeks, and it's just what it is. I know it frustrates a lot of people, but the forecast is for further continuation in the triangle. That best I can tell at the moment, it looks like we are caught in a triangle. There is always a level when we say the triangle breaks, and we talk about that. But I know it is a frustrating forecast, but it is also a forecast that further sideways continuation is expected. It's not what people want to hear necessarily, but it is hopefully still a helpful forecast, and it's been kind of the forecast for a while that that we are here in a triangle. So we just have to be patient, right? That is hopefully one of the things that you can take away from these videos is that you just mentally and financially have to prepare for more choppy sideways action. That's very important. Overall, I think there are a few things that we know, and I also want to talk about what we don't know. So we certainly know that we haven't seen yet any impulse to the upside, since the market topped here around the 3rd of December. That means we cannot confirm yet any low. Okay, there's no substantial low in place yet. If it is, we can't say yet. It's not. We can't identify it yet. We also know what key support is for the current range, and it's Fibonacci-wise the 23.1 cent level. But these previous swing lows are nearly as relevant, or as relevant, more relevant even. So it's 23.4 cents. So I really don't want the price to break below 23.4 cents, because if it does that, well, we have a breakout of the local range to the downside, and this would open the door to a test of the 16.7 cent level. Then in a wider wave 4, it would mean that we are already a little bit further ahead than I think we are in the structure, okay? Because we are then in a larger wave 4 correction as opposed to a smaller degree wave 4, which should hold the 23 cent level. And so we know support, yeah? We know that we haven't seen any impulse, so no breakout can be confirmed. We also know that we're still in the sideways range. We know a local resistance area within the range, which is between 28.6 and 29.4 cents. I communicated that in yesterday's video. And what we don't know is, of course, the breakout direction. Well, assumption is, because this looks like a normal triangle in an uptrend, assumption would be upside continuation. But of course, if the price breaks below our signal line, then there is no upside breakout, and we will have to prepare for a breakdown to 16.7 cents next. But for now, the white scenario is preferred, which assumes that a third wave topped here on the 3rd of December. We have a 3-wave move down in an A wave. We have a 3-wave move up in a B wave. We have a 3-wave move down in a C wave, which might get one more low. And it's important that this C wave doesn't break below the swing low from the 20th of December. So not below the 23.4 cent level. Then there could be a D wave and an E wave. They are still outstanding, and they would likely form a series of lower highs and higher lows. That is essentially what a triangle does. It requires a break above the 33.9 cent level for a first confirmation that an upside breakout is underway. In that case, then we are likely going to test the swing high from the 3rd of December, as well as break through. That would be ideal, and form one more high in circle wave 5 to test the 48 cent level next. So this is sort of the forecast at the moment, but it also means that there is at the moment no evidence that the triangle is complete, because when a triangle completes, it would typically lead to a rapid surge, and there is definitely nothing of that at this stage, yeah? So we're dealing with back-to-back corrective price action, which is why I'm considering an Elliott wave triangle. Triangles tend to morph into different structures, so it is important to remain flexible. Also, we are moving here in just simply corrective sideways structures, which means that the subwaves are always 3-wave movements in triangles. So it means we have to be on the side of caution, because 3-wave movements tend to evolve. I mean, there are more than 10 different corrective patterns, and you just have to pick the right one for each. Typically, we start by tracking the ABC structures within the subwaves. It's typically a good start, because this is the most probable scenario. So I think we have to remain a bit patient. It will be interesting to see if the market forms one more low in this C wave in the triangle before starting the D wave, and then we'll just take it from there. So we need a bit more patience here. Certainly there is no impulse visible yet, but break being below 23.4 cents would be a good indication that we have topped somehow and that the triangle is being invalidated. That's the update about HBAR. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching.